Okay, there's no audio, GM, because we hadn't started yet. Okay, we start at the top of the hour every day, right? So I had some technical issues. Looks like I may have to trade in my 1962 Gremlin laptop and get another machine. Okay, ECB day, everyone? Everyone doing okay? Also, today we are being live streamed on investing.com. Welcome all our viewers to investing.com. So I've been pounding the table off this throwover line all week for this bounce in gold to occur. Here we are. Okay, so there are multiple opportunities. A turnaround Tuesday trade worked. We retested, diverge. I'd say, and like I was talking to Blake yesterday, I'm always amazed how these lines end up meaning something. So this wedge line meant something when we had a throwover at a tremendous move of 80 bucks, and the pullback to it meant something. We're having a bounce of about 20 so far, and I thought 1520 was viable. In silver, I thought 1850 was viable based upon some moving averages here. Yeah, there it is. So we're almost there. So anyone that used weakness to get long precious metals, not for a move to new high, but for a correction of the recent decline, should have had a good week. Yeah, they must have disappointed. I'm just, I talked about yesterday. I'm not surprised because yesterday I talked about, so, every once in a while I'm right about a couple things like a broken clock, but yesterday I was talking about that this pattern after yesterday's candle looked incomplete and we could get another blow to new highs for a 1, 2, 3. And that's what's happening. Also this week, I talked about for risk on to continue. We needed a continued decline in USD won, and that's what happened. That's what lit up the S&Ps. They didn't quite make a new high. I'm looking to get short in front of the Fed. So it doesn't mean today because we're confirming everywhere. I'm not going to do it today. Also, a very important technical event yesterday. Okay, and we talk about this a lot in FACE. False breakouts tend to be excellent trades. All right, so last week I was constructive looking for a breakout. We got it. I talked about this as well. We. So we had a test of the breakout here the day before yesterday, and we had a breakout failure. So this was just a false breakout, shook out all the shorts, and now I believe we're headed back down towards this descending triangle line. And under this line, I don't think we'll have a false breakdown. So I think all the Elliotticians that have been bearish crude for a while, they haven't been wrong. It's been sideways in this formation. In my opinion, I think we're going to take out this descending triangle line down the road, and it actually measures the formation from here to here down to about 44. Let's see, 50, 34. Okay, 50, $16 from 50 gives you 34 long term on this daily formation. So you have to sell rips. Hasn't given you a chance to sell a rip yet, but I'm sure there'll be a chance. I would say back to the false breakdown would be an excellent opportunity. Back around this 56, 80, 57 level, should that occur. Let's see, what else is there to cover? US dollar yen. I had Saeed on earlier in the week. His target was 118.20. I think it was here when Trader 1 SC was on, high 18.17. So, that's what I'm saying. Besides the team being great, I think I bring on some pretty good guests that give you some pretty good ideas. Give me a Y if you agree. Okay, so something that's different about us, and I really challenge everyone to go and see if you could find anyone else that does this. So all of our guests, they have services too, right? And we bring them into our community. Oh, thank you, David. We bring them into our community to give you good content, to provide you with intelligence gathering outside of our service. And I don't think anyone else out there on the net gives a competitor that type of exposure because all they're thinking about is their own interest. Okay, their self-interest. We put your interests above self-interest by doing that. Anyone else ever been to an FX subscription or market subscription service that airs potential competitors every day? Anyone ever see that before? Okay, that you know why? Because we want you to succeed whether you subscribe to us or not. Whether you're with us or not, we're always rooting for you. And if you appreciate that and what our mission is to build up and edify traders every day, then this is your opportunity coming up early next week to actually, instead of trying to get something free all the time, which makes you a lot of money just hanging out in face, I would say if you hung out in face, you can make a lot of money. I'm not saying there aren't losses. It'll be Sussex, it'll be Monday. Is that correct, Blake? Okay, there won't be any trials during that. So if you want a trial before Monday to look it over before the offer, you do it right now. You click it. You're on the SB trade desk and not much. Yeah, I love Jamie, but I doubt Jamie and Michael would invite me as a representative of ForexAnalytix to be interviewed or have my content on their site, right? So I think what we do is unique, and we have a heart for you guys because we know how hard this is. And even after you subscribe, you have to do your part, and that means spend the time, work hard at it, and persevere, and we'll persevere with you. That's a promise. So I'm going to turn it over to Blake now and see what he thinks after this action in the ECB because I was kind of busy just trying to get up for this. Oh, and stick around for Emma Molman. It's going to be our first interview with Emma, and she's going to be talking really some very interesting aspects of what's happening in China. So if you're a China watcher, stick around for the top of the hour to see Emma. She's very pretty to boot. Maybe I could get her to use her webcam. Anyway, hi, Blake.
Hey, Coach. How's it going?
Good, buddy. So I guess the jury has spoken.
The ECB is going to do whatever it
Oh,
takes
yeah,
for as long as it takes.
yeah,
You know what I'm saying?
yeah.
That's what the
Yeah.
ECB is doing. So
Uh,
the initial number, I think it was originally 20 billion a month in QE. That was like a little underwhelming. You know, the
yeah.
market originally. That's why the euro spiked up towards
Well,
10. You know,
I know you made money. Look at that 61.8 level. So yesterday in face, and I tweeted this, Blake. You said I'm not going to chase it. I'm going to keep my orders in at the 109.80-ish level, 61.8. Good call, man. Nice trade. Where did you get out?
Oh, I got out. I got out at like yesterday at like 110.10, something like
Oh,
that.
nice scalp.
Yeah. You know, it did okay. I mean, unfortunately, like this morning, I was long the Euro Aussie, Euro Canadian going into this news, and it wasn't too big. It spiked up, and I should have just got out on the spikes, and I didn't. And when the news came out, by the time I got out, I took a little bit of a
Hit.
hickey on some of those the crosses, but you know, the euro Well, first of all, the euro is now under pressure, and we are, we're testing the 78% retracement right now. Remember, Draghi is going to be speaking here in a little bit. He's going to have his presser. Um, are we going to see, a big move from here? I don't know, but he's going out dovish, and he's like, ECB is going to do whatever, we need to do at 20 billion a month, and we're going to run it, as long as we need to. So that in itself should keep the euro pressured. I can't imagine what he's going to say that's going to reverse the course of the euro's direction this morning. But then again, I've been stunned before. Just because that's how I feel right now doesn't mean that that's the end all be all. But the euro right here, I think, in order for it to be, to backfill a little bit, we got to get back above like this 109.80 and change. The euro for right now is still in the same longer term, descending wedge. Now, what's surprising is the stock market did not rally more following that news, because this is basically quantitative easing, and the ECB is putting in an unlimited amount of liquidity into the market, at a certain pace, but still, it's just adding liquidity. And so I'm surprised that stocks, with all the positive China news overnight, and with what the ECB is doing, stocks aren't a whole lot higher. So we'll see what happens, a little bit later. But I think the euro, like I said, should stay pressured. One of the other things that I want to mention that is big talk around our office is there is 3 billion of euro dollar expiring at 110 the next couple of days. So maybe if you're sitting here and you're short the euro and you're like, well, why isn't it dropping? Why isn't it going further? There's a lot of, gamma expiring around the 110 level over the next, 2 days. So are we going to have a runaway freight train on the euro lower? I don't know. I wouldn't be surprised if we just bounce back up to 110 for whatever reason. And, maybe people get this inclination that Draghi's not super dovish, but it doesn't matter. He's heading out the door anyway. But whatever the reason is, maybe, we bounce back up to 110 and we just kind of hang out. I guess the point is that I want to make here is be careful with the euro. Down here, I think it's gonna stay heavy, but that doesn't mean that Draghi can't say something in the next 20-30 minutes to reverse the course. The pound is stationary right now. The pound's just kind of hanging out, and I have to say I'm pretty impressed that the pound hasn't moved. Lower with the move in the euro. The pound's actually holding up quite well. As you guys know, and I've been pointing this out for the last couple of weeks, this is such a big resistance at 123.75, or basically 124. As long as we hold near that, I think the risk is starting to build that we break higher. With this move down in the euro, given that the pound hasn't pulled back, that's just giving it more of a springboard effect. I use the analogy of the beach ball underwater. You have this beach ball and you're trying to push it underwater and it's not pushing underwater. Well, eventually it's going to, basically it'll pop back above water if some pressure lets off. And so if the euro bounces back to 110, maybe the pound, is going to try to make a run at this resistance again. So just be careful with that. The Aussie, like I said, China news overnight, that's kept the Aussie pretty well bid. We're at the 50% retracement, just kind of holding up relatively well, not really going anywhere. The Kiwi also is stationary. You can see the Kiwi is in this like nice little, box of support and resistance, just kind of sitting around. And you know, I guess right now the market's probably more or less waiting for, you know, what's going to happen with Draghi during his press conference. I think that's what most people are waiting for at this point. One of the currencies I just picked up just a bit ago is I bought the dollar Mexican peso on this dip. I've been waiting to buy this dip to the 618 all week, and we finally dipped down there. Relative strength is very divergent. Now, I'm bringing this to your attention because in the event that stocks, which like I said, I'm surprised that we're not higher. If stocks start to roll over, one of the pairs that, you know, may firm up a little bit is the U.S. dollar Mexican peso. And so as long as we can hold here above this 1940, I'm going to try to hang on to it. Like I said, it looks fairly constructive at this moment. And I've been wanting to buy it down here because, you know, ultimately, most of you guys know, if you've been listening here for a while, I'm looking for an eventual move out of this big triangle higher. We had this false breakout, allowed us for this retracement, but now I'm actually ready to establish that long position to look for an eventual break higher. So, you know, like I said, I picked up the dollar Mexican peso on this dip, and I'll see if it can hold right now. But all eyes are on the euro this morning, and let's see if Stelios. I know he's got some allergies this morning. Stelios, you here?
I'm here. Hi.
Hey, so it's allergy season.
Not yet, but I am allergic to quite a few things. But anyway, you have to excuse my nose and my sneezing, which is going to come. But anyway.
Yeah, no, that's look, I'm Mr. Snotty Pants during allergy season. There's nothing that I can really do to stop it. So, now what do you make of this ECB announcement? I mean, because first the dollar amount that spiked up the euro. And that's why the euro, you know, moved up above 110.50 and then immediately retreated because of the unlimited amount of money that the ECB is willing to throw at the market, so
yes,
or at the economy.
It's exactly what you said. And for the people who are in our chat room early this morning, before the ECB, there were a few people saying, "Oh, I want to buy euro dollar on dips," and I said, "Look, be careful because I think both the ECB and the Fed next week." Are probably going to be more dovish than expected. And what happened is exactly what you said. So the 20 billion was not a shocker, but then Draghi said they're going to do it as long as needed. And frankly, this reminds me, it's like a second smaller bazooka, like the one he did in 2012, when was it? So also we have to mention that they cut the deposit rate to -0.5%. But the bank's holdings of excess liquidity will be, they said they're going to be exempt from the negative rate. So there's going to be some tiering, and that's good for banks. So bank stocks are rallying. But overall, my first feeling is that this is dovish, and it's going to continue to be dovish, and I don't see what's going to change that. And you have to remember Lagarde is coming to take over, probably. I mean, not certainly, but probably. And she's no hawk. She has said already that the lower bound of rates is not being reached. And
she's a dominatrix.
Yeah. So
that's actually a very scary and frightening thought. So
yeah. So my feeling is
Lagarde, or what she is.
Lagarde. I'm sorry. In dominatrix outfits. That's very scary to me. I
have a poster.
She'd be yelling at you, Dale. What's my name, Dale? What's my name? Anyway, I'm sorry.
Maybe she'll spank me.
I digress. But so it's gonna be it's funny. I can see the memes flying. Around here, so that's gonna be awesome.
It'll be a little different than yelling, where
a little.
Beard, they showed her with the beards in it.
My feeling is still that this is gonna, I've said it in the past few months. I think the euro and the dollar is going to have a hard time in the next year or so, and I just don't see what's going to bring strength to the euro. Okay, we're going to wait for the pressure, obviously, but I don't see what's going to turn things around.
Yeah. So with what and by the way, Dale, I don't think Steve is going to be joining us today, so I'm going to be around for the press conference.
Okay, buddy.
Because I don't want to leave you guys hanging.
I
Obviously.
guess it's starting now. Someone just, Ingmar said it's,
What?
the webcast is
No,
starting.
it's in 10
Oh,
minutes. 10 minutes.
yeah. It'll be about
11.
10 minutes before it'll be about 10 minutes before
I
they
hope
actually
no one
start.
throws popcorn at him, because that really scared Draghi a few years ago. Someone threw popcorn at him.
It was confetti, wasn't it?
Oh, okay.
It
Yeah.
was
Yeah,
confetti.
something, yeah.
And a lot of people were awestruck. Well, she was kind of cute.
I know
have to
you.
admit.
I know you hit the dirt as a Marine anytime an enemy threw confetti at you, Blake.
Oh yeah, you throw confetti and I'm done. Let's we'll watch the euro response here in a bit. Obviously, it's gonna be a big one. I'm gonna go through some of these euro charts.
Okay.
Here
That's
in a
the end of
moment.
my stand-up comedy. So
All right, thanks.
go ahead, buddy.
We all appreciate it. Now, Dale, do me a favor. Keep an eye
Yeah.
on the questions and comments as they're coming in, because if anybody has anything that they want to see that pops up, let me know. Especially ahead of the ECB press conference, because I'll be reading some of these headlines that come via Bloomberg. They'll be coming pretty quick. You can see actually Mnuchin's comments are coming in right here.
Yeah.
He says.
It's
Trump
covered,
approved
Blake.
Fannie Freddie plan. Okay, there we go. Okay, so anyway.
But by the way, Blake, sorry, Trump has already tweeted about DCB.
Oh, he's got to be furious.
Yeah. How they are successfully depreciating the currency, and how the Fed is behind the curve and all that.
Okay, well, of course he's gonna put the blame on the Fed. He's gonna continue to harp on the Fed. Now, whether the Fed,
How long can he hold back, Blake, from telling Mnuchin to intervene in the market? Is what I'm thinking.
I don't know. That's one of those.
It would be something he would do. I mean,
Yeah. I mean, that's. I think it's a very valid risk. I mean, it could be one of those days that we're just sitting there, and all of a sudden, there's some sort of plan to weaken the dollar, and the euro is 8 to 10% higher instantaneously. I think that's a risk. I'm not saying that I'm long the euro because of that. I buy the euro based on what I see technically, and I'm trying to play this, coming out of this wedge, but I'm not going to get long on that idea. But I'll tell you, I think that is a risk at any given time that you're short the dollar, or you're long the dollar, is that there's some sort of intervention efforts that is, coordinated amongst central banks.
I don't know if that'll happen. The coordination could be because we've made our friends really aren't our friends. It's all self-interest now. So I think it would just be us. Maybe Japan would go along, but I don't know if Europe would go along with that.
Yeah, well, no, I doubt that as well. There were talks at the from the notes that I read, some behind the scenes talks about, how and what methods that the U.S. could use to weaken the dollar at the Jackson Hole symposium. So, I think that it's a floating idea that that's trying to figure out how to engineer a weaker dollar. And like I said, I don't know how it would happen. I don't know the mechanics of how it would work. All I know is it is a scary thought and idea, because you guys, especially those of you that have been around for 10 years or so or plus, when the Swiss National Bank removed the floor, and we saw that massive move in the US dollar, Swiss franc, and all the Swiss franc pairs, it literally wiped out a lot of traders. And those types of events, you don't see them often, in my 20 some odd years of trading. They're very rare and few and far between, but they happen. And it's a scary thing if that type of situation does happen, because if you're caught on the wrong side of a move like that, there's not a whole lot you can do. You know what I mean? You know, your stops are only so good. The slippage could be, you know, crazy. So anyway, just some food for thought. It's like I said, it's not something that I actively think about, that I'm actively worried about. It's just something that that I'm thinking of. Can you guys hear me?
Loud and clear, Blake.
Yeah, yeah.
Loud and clear.
Oh, okay. Well, it sounds like, Steve, you're here. I didn't know you were coming in today.
Oh yeah, absolutely. Took me longer than I thought, but yeah, I'm here. Just came on.
Okay, great. Well, I'm not going to pass it over to you just yet. I'll leave it here I'll leave us here for just a couple of minutes. But I wanted to, get your take on what the ECB did here this morning about basically doing whatever it takes for as long as it takes. What do you think about what the ECB is doing here?
I remember specifically, and I think Stelios and Dale remember it as well. Last summer, when the market last summer was expecting that the ECB might start going on a hiking cycle, like this the next fall, the previous fall. So when they postponed it and said that we're not going to be hiking until next summer, meaning this summer that just passed, my first comment was, if they're postponing until next summer, they're never going to hike. They're going to do it during the next business cycle. So, it comes as no surprise. I mean, we've seen the data deteriorate quite a lot, especially from Germany, which we know is the steam engine of the European economy. And I think that, they've already started doing what they will be doing in monetary policy. Now, the question is, since rates cannot go much lower, and there is even, among the PhD community, there is even a lot of doubt that negative rates do actually work, because we know that there are negative side effects. So, it's a matter of balancing, the negatives and the positives. So the question is, what next? I mean, yeah, more QE, fine. What else? Because I think there are more tools coming, during this recession, whenever it comes.
Yeah. And
Helicopter money, right?
Helicopter money. Let's just start dropping it on people.
Most likely, yes. Yes, because they saw that the inflation that they created through QE went right at the top. This is one of the reasons why we haven't had so much inflation in consumer prices, besides the obvious fact that they're not measuring it properly. And they know that, this created quite a lot of social unrest, because a lot of the money that they sent to the economy didn't trickle down, as they like to say in economics. So we know, since the first initial fears of a double-dip recession in 2011, they had already started getting afraid back in 2011 that we might go on another recession as fast as like 2 years, next to the previous one. So they had already started making plans. And I remember quite clearly that, yes, helicopter money, for those that don't know, helicopter money is, do something like a QE, but instead of giving the money to the banks and buying back bonds, for example, you might decide to say that, okay, I'm going to credit, let's say, people's accounts by X amount, or people that have, that meet X criteria, we're going to give them a big tax break or whatever. So in essence, you stimulate the economy by stimulating, the lower end consumer, medium to lower end consumer. That's the whole, concept behind that.
Yeah, well, we'll see if that how that works, if that's ever enacted in any of the major G10 countries. But hey, I'm going to pass it over to you guys. But I want to thank everybody for being here today. Keep in mind that Draghi, like I said, I'm not sure what he can really say to reverse course of the euro. It seems like technically the damage has been done. So what if I were, looking at the euro and just trying to play it from here, I'd probably look spikes back at, above 110, maybe 110.10, 110.20 as opportunities to be on the short side of the euro if possible. But that's what I'd be looking for today, just technically. And knowing it, like I said, I don't know what could turn the euro completely higher, but then again, I've been stunned by central bankers on many occasions. So
that is very true.
Yeah, it's not.
That is very true.
Yeah, exactly. So I'll pass it over to you guys. Have a great one, everybody. Thanks everybody for being here. I will see you tomorrow.
Thank you, Blaker.
Thanks, guys.
As Dale likes to say.
Good hunting, bro.
Good luck. All right, thanks.
We have CPI in about 10 seconds, so let's have a look at that.
Yes, 10 seconds before the release, but give me a second to take this. Okay.
Sap, if I was in Athens, I'd hang out with you and hand you tissues.
Yeah, thank you, Coach.
104.
Core CPI is 0.1 better than expected.
Yeah, US core CPI 2.3, but the CPI, not the core, year-on-year 1.7 versus 1.8. Initial jobless and continuous jobless exactly as expected, so no surprise there. I doubt that any of these data can actually move the market. So the market is going to be 100% focused on what Draghi has to say. So, I think that what happens for the rest of the day, perhaps for a couple more days, is 100% on Draghi.
Are you adding to your gold short here, Steve, on this pop, or are you going to wait for a while?
Unsurprisingly that it popped, because, the more monetary metals like gold and silver, here central banks, pointing to more dovishness, to more inflation, the more they're going to be bid. Now, we've had a nice reaction from the support area in gold.
Yeah, that's what I'm asking.
Yeah. The question is, are we headed to new highs from here?
No way.
There's no way in the markets. You know that better than anybody.
Okay, I don't think so.
I'm quite skeptical. I'm quite skeptical. Unless Draghi gives to the market, a huge dovish message, a lot more, than the decision, involves. If he, in essence, points to them having discussed a time horizon for further tool implementation or, whatever else would, who knows? Central bankers are,
All right, where would you add to a gold short?
I think we're getting close. Let's go to 4-hour chart. I'll show you.
That was really the question. So,
yeah.
Okay.
So here is silver. Since silver is already on, as you see, it keeps moving exactly as we drew. I think that, critical area for silver is 1850 to 1860. So, we're not far away from that, as you see. And if we want to go to gold, and here is gold. As you see, we're approaching this area. 1520 to 1525. That's an area of interest. That's exactly what we drew a few days ago, as you see. So I think we're entering an area, that's quite interesting. If gold wants to turn lower for one more push to the downside, I think that's more or less where you should be looking for that to happen. If that's not the case, then we're headed to new highs. Fundamentally, I keep saying that, so no need for me to keep repeating myself. I remain bullish both the metals. Don't forget that I have exposure in the physical commodity itself, because that's how I think you should, belong. Owning the physical commodity. So there's no question that in my mind that metals are headed a lot higher. The question is if it's going to happen from here, which I'm still doubting. I would like to see one more leg lower, for a healthier correction before, we see more upside. Now, is it impossible to move to new highs from here? No, it's not, because the trend is higher. There's no question about it. Okay. So, if you're trading short, as I am short gold at the moment, you're trading at counter trend. So, make sure you know what you're doing, having to do with, your risk, the leverage you're using, etc. So as we see, as we speak, it's pushing in the highs of the day, and we are indeed entering this horizontal support resistance area. Stelio, anything else we wanted to add before Draghi starts speaking, which he's actually doing as as I'm saying this, I just see him on Bloomberg.
Not really. No, the ECB was the main event today, and I'm going to be here to let you know for any big headlines.
So please go ahead and interrupt at any given point, because what he says is definitely going to be moving the market.
Sure thing, man.
Okay. Now, quite clearly, Euro Pound continued lower. After this, so Euro Pound is getting quite close to reaching. If you remember, I was talking about 88.50 when we started the correction lower. So we might actually be headed there. Yeah, I mean, it can even happen today, in all honesty. Let's also measure an equality target here and see where that would be. So if we fib extend this from there to here and there, let's see where that would target. 88.40. So you see, nice confluence of support here. 88.50 horizontal support area, 88.40. Within that zone, we have a quality target of this move lower with the leg lower that is currently unfolding. So 88.40, 88.50, quite an interesting area that the pair might find support. If you remember, now having to do with Euro-Aussie, I pointed out that Euro-Aussie was testing a very, very significant support area. We seem to be slicing through it today. I'm going to show it to you on the daily chart as well. And here is Euro-Kiwi. Let's go on the daily so you can more clearly see the big picture. Of course, I'm going to be focusing more today, speaking about Euro pairs, especially as long as Draghi is talking, and then we can check what the rest are doing. So Euro-Aussie, very, very significant technical move. You can see why this ascending wedge dates back to March 2017. Okay, so first event, the break below the ascending wedge. Second event, the break below the 200 DMA, which was slightly lower. And now what is left to, in essence, confirm that we're breaking down is a lower low. Where is the previous low that we're talking about? Here at 158.90. So below 158.90, in essence, we violated every single definition of this uptrend. So I think it's going to be quite safe to say that we might be headed a lot lower, especially as long as we have like a risk-on environment that also helps to the downside. Now, if for some reason we rebound from 158.90, I hate Magic Mouse. I think that finding resistance back at this ascending wedge support is going to be a great opportunity to be short for more downside. Now, if we get that. Now, Euro-Kiwi, as you see, more of a complex situation here. We're looking at that as a triangle. Perhaps it's a bigger triangle, something like that. Okay, so not a clean breakdown as we have in Euro-Aussie here. I mean, we have more distance. So obviously Euro-Aussie looks like a much better bet to the downside than Euro-Aussie. As you see, Euro-Aussie is in the middle of the recent formation. Now, having to do with Euro-NOK, I showed that yesterday. Nothing much, we remain within the wedge. Having to do with Euro-Yen, which we also visited yesterday, if I'm not mistaken. Now, if you remember, I said yesterday that be careful here because Euro-Yen is testing confluence of resistances. Specifically, I mentioned that we were testing the spike low as resistance. At the same time, that same exact area was the 38.2% bid of the last move lower. And look at this beautiful rejection there. Both today and yesterday, we spiked intraday above this area, but in both occasions we failed to hold the gains. Especially today, we're threatening with quite a bearish reversal outside black candlestick in essence, because we first went to new highs, and we're most likely going to close lower than yesterday's candle. So that's an outside black candle, quite a bearish signal, especially considering the area that we saw that taking place. It is a decent risk that we're going to head lower from here. But I want to see first how we close the day, because at any given point, if Draghi in his statement is
He's starting now, Steve, I believe.
I know.
Yes, he started, and actually he did say just about 30 seconds ago they're ready to adjust all instruments as needed. So he's not giving the market anything hawkish yet.
Yeah, I mean, he's not going to give anything hawkish. The question is, if for some reason the market is going to worry that he's less dovish than they want him to be. That's the only thing we should be talking about. Now, what surprises me kind of is the fact that so far the S&P does not seem to be benefiting that much. I mean, the S&P spiked to retest the previous highs almost, following yesterday's night announcement from Trump. Stelios, I don't know if you already mentioned that he postponed increasing tariffs on Chinese products by 15 days. So we had an initial spike higher following that, but the market, following the dovish signal from the ECB, does not seem to be really racing higher yet. Now, of course, the S&P is still positive on the day, 0.24%. The DAX is still positive on the day, but nothing magnificent, nothing to really write home about. It's like the market is really.
We're so close, I can taste it.
Yeah, it's like the market is still.
Can you taste it?
Not really.
All right, let's go have a Euros then.
So let's see what's going to happen from here. Stelios, anything substantial to talk about? By the way, I'm pretty sure that look at this. I talked yesterday about the Euro Swiss. Look at this attempt of a break higher, which led to, a nice failure. I'm pretty sure that the S&P is closely monitoring this, because, the pair was looking like it might finally put some kind of a rally if we broke above 110, and we're doing the exact opposite here. So the S&P must be on alert. 1075 is the next area of support here. Stelios, anything to consider?
Draghi just said not much, but he did say that staff projections show a further downgrade of the inflation outlook. So the euro is at session lows. I think it's. Let's wait for the Q&A.
0.67% lower, and yes, it is at session lows indeed. And if we close at current levels, let's zoom out a little bit on the chart. If we close at current levels, that's going to be almost 1.5 year low. Sorry, 2.5 years low. Sorry. So yeah, quite bearish price action. I would be a little bit careful here just from a technical perspective, because as you see, we have this descending trend line already tested 3 times from the market. We've rebounded so far 3 times from there, currently passing from just above 109, like 20 pips lower than where we currently are. So from a technical perspective, pay close attention to this 109 area. We also have 161.8% extension of this last rebound at 1092. We also have the 161.8% extension of like a bigger bound coming at 1089. So quite a few areas of support there. But we're getting very, very close to that. As you see, the USD Swiss is not benefiting that much. And the reason is one and very simple. It's called Euro Swiss. The fact that the Euro Swiss is tanking at the same time that the Euro USD is tanking is preventing from USD Swiss to be equally bullish as the Euro USD is bearish at the moment. So keep that in mind. As long as the Euro Swiss remains under pressure, the Euro USD is going to be performing better to the downside than the USD Swiss is going to be performing to the upside. Let me open the question box. Stelio, by the way, you might need to help me a little bit with questions, because one of the few disadvantages of Zoom is that, I joined late and, you can't see the questions that were asked, prior to joining. So I can see only questions from past 24 minutes and onwards.
Okay.
How about creating a non-bank entity so that the FRB isn't biased? Traders shouldn't be surprised by dovishness from ECB. Draghi has continually warned to do whatever it takes. Yep, that's true. And in general, central banks have been following the same path, more or less, not the same tools, but the same path of monetary policy since the 1999-2000 dot-com bubble bust.
In fact, Steve, the only question from before you came was for the Nasdaq. So have a look at that afterwards.
I'm going to show that. Do you have a WhatsApp line? No, we don't have a WhatsApp line for our traders, but I remind you that we do have a chat room, right? There you go. Let me also refresh the page.
And also thank you, Tom, for the advice. I'm sipping on vitamin C right now. Thank you.
Here it is, 97 people currently on the chat room exchanging ideas. There you go. Amanda posted something. Let's see what it is. Euro Kiwi, most likely from what I see. Yeah, Euro Kiwi. A 2-hour chart on Euro Kiwi pointing that this bear flag points lower. As you see, a lot of information sharing here. So yeah, we do have quite a nice chat room for exactly the reason you mentioned. And by going to our, by becoming a ForexAnalytix subscriber, you gain access to the chat room as well. Quite a nice tool. A lot of very experienced traders, because before, besides people in our team, exchange ideas there, they really help a lot, because it's like, having several pair of eyes looking at the market. So, very frequently, something that you wouldn't notice somebody else does. And, that's nice with, community trading in essence. I mean, you exchange ideas, more charts pass through your eyes. So you get more information, and that makes it much easier for you to, to decide on, quality setups. Okay, Euro USD pushing lows of the day now, almost touching the confluence of this descending wedge support under 161.8. Very, very crucial. What's going to happen from here? A breakdown from here is definitely a bearish development, in which case, if we want to be talking about downside targets, as you see, 108 is the target that opens below that. If we zoom out, you can see why 108 has been an area that has acted multiple times as support resistance. So below 1091, we open the 108 area, and below that, we open the 105 area. Okay.
Steve, the ECB have lowered their inflation forecast for the next 2 years by 0.1 everywhere, basically. So,
okay.
Yeah.
Anything else besides downgrading inflation expectations?
No, but Draghi said once again that it's most likely that inflation is going to drop a little bit first before rising back again towards the end of the year. I somehow doubt that, but yeah, that's what he said.
What you saw is not, by the way, to a friend that's asking, what you saw is not Zoom chat. It's chat embedded to our platform. We have an elaborate platform. You can see it here. So the chat is embedded here. You can launch it from over there, go to chat room. So if you are a ForexAnalytix customer, you launch either from your application or from the platform here, you launch chat room from there. Stream died, no sound here. Probably just his problem. Still, your sound goes through just fine, right?
Yeah. We do have a sound problem with the sound with a with the video on YouTube. The sound is fine, but here on Zoom, everything is working fine.
Okay, perfect. Now, there's a question about where to from here, having to do with the DAX. The DAX has now easily completed the inverted head and shoulders formation. If you remember, I mentioned that the day it was breaking out. It's now approaching the 88.6% fib extension. The move higher looks, quite healthy and impulsive. Obviously, chasing up here makes no sense. So, you want to align yourself with this move higher, hope for like a pullback towards like 12,100. I think that would be a decent buying opportunity, something like this. Now, the question about the NASDAQ approaching the all-time highs, obviously we've, passed through this area of resistance. So, as long as we remain above the triangle, new highs can easily come. I mean, I expected one more move lower. To be very true, to be very honest, as I've said multiple times, I did expect a high chance of one more leg lower before higher, but that never manifested. So you have to respect, what you see. So, the chances that we're going to see new highs being up here already are obviously quite high. Where would the next target be if that proves to be the move? Just that, then, I would fib extend the corrective move. I mean, if that was it, what we've seen so far, then I would fib extend that. We can delete the previous fib extension, fib extend this one, and for example, 127% extension is 8,260. So there you go, next upside target. And then the 161.8 at 8,543. Those are likely upside targets. We would do the same here with the S&P. We would fib extend this, in which case upside targets 3,096, 3,183. Needless to say, my opinion, if you're buying stocks up here, for like, a long-term play, it's pure insanity. Now, if you're trading it like shorter term, absolutely the trend remains higher. But I do believe people that are buying up here are going to be bag holders in essence. I mean, people that are buying to hold up here are going to be bag holders. As we see, silver did reach the bottom of that horizontal support resistance area and already pulled back quite a lot from the highs of the day. So silver is showing signs that
that may have been it.
Yeah.
And Jason didn't agree with the bag holders. I heard him. I think that was Jason.
No, that was not Jason. That was Aliki, one of my cats.
Oh, okay.
Yeah, she didn't agree by the fact that she climbs on me while I'm on the webinar.
Oh, okay.
Actually, if you want to make the show interactive, I can show you.
Okay, there you are. All right, your kitty.
There
she didn't like bag holder.
Yeah.
Oh, okay. She just got out of the kitty litter. All right.
No, don't worry. I'm not easily disgusted by cats. I mean, they sleep on my face literally. So.
Oh yeah, they try and smother you at night, right?
Oh yeah, they sometimes
Yeah.
they wake me up because they want to be, cuddling or petted or whatever.
Yen reversing too, Steve. Any thoughts there?
Yeah, I wanted to mention the yen because look at this daily candlestick. Despite seeing, look at this.
Yeah.
I mean, this is a horizontal support resistance area. So far, something like a shooting star developing on the daily here. Of course, too early on the day to be, making plans based on a candlestick, that we don't know how it's going to close. But I do notice that, the candlestick here is not what would people expect. Look at the same time, look at this reaction from the Bund. Right. Unsurprisingly, of course,
You called that top.
Given the dovish move, we see the Bund catching a lead here. And as you see, the treasuries are somewhat following suit here. Of course, the fate of the treasuries and hence the fate of what's going to happen with the Euro USD is going to be decided next week by what the Fed does. Because if for some reason the Fed does not follow the ECB, as you understand, we're going to see a big divergence in yields between the Fed and the ECB, which will translate to even lower prices in the Euro USD. And a bigger divergence between what the treasuries and the bonds are doing.
Did you cover crude?
But so far,
bro?
the treasuries seem to be, due to correlations, following higher. The bonds, as I said, in order for them to sustain a rebound, Powell will need to play ball. He will play ball. I mean, there's no question they're going to cut 25. But for example, if they just cut 25, and if the rhetoric is not as dovish as the market would hope, I think we might see the treasuries sell off once again and yields climbing somewhat higher. Stelio, anything worth mentioning that Draghi has said in?
Hey, Steve, yesterday the crude negated the breakout. Does that, are you viewing it that way too?
So nothing to really write home about. Okay, as you see, by the way, I'm not related to Euro USD, but Euro USD is pulling back somewhat from that area we were talking about, from 1092. So we're off 20 pips off the lows of the day. So far, Draghi hasn't, proved enough to help the pair break that, key support trend line. And as it looks like, if you remember, we were talking about the Aussie having stalled here at the 50% fib, as it seems one more indecision candlestick so far here. Kiwi, same deal from a more important area. Let's have a look at the DXY, which is very, very highly correlated with the Euro USD, so it must be near the highs of the day. There you go. And pay very close attention here. I remind you that the DXY has been rejected multiple times from this ascending channel. And we're once again testing the channel. So be very careful here. Also, resistance on the RSI. You can see it here. So DXY on resistance, Euro USD a few minutes ago was on support. It is important to see if by the end of the day, we're going to see technical breakouts. Probably if one breaks down to the downside, at the same time, the DXY is going to be breaking the upside. One thing is for sure, if you want to fade this move from a technical perspective, this is where you do it. Because you have a very, very tight risk. Okay, I mean, your risk in the DXY is like 99.40. Your risk in Euro USD is something like 1088, 1089. So you're risking less than 50 pips there. Coach, do we have an interview today?
We're supposed to.
Coach?
Let me see. Are you there? Can you hear me?
Anyhow, I'm going to cover
Can you hear
crude.
me?
We have questions about crude and USD ZAR.
Well,
So
can't you hear me,
crude,
Steve?
big reversal yesterday. If you remember, we were
Steve,
talking yesterday.
can't you hear me?
About the potentials, the upside potential of crude, if it proved that that was a true breakout, and it proved the exact opposite. So it reversed lower. With yesterday's candlestick, we saw an evening star formation and at the same time an invalidation of the breakout from this descending trend line. So another false move from crude, and we're seeing continuation today. So what can I say about crude? It's very, it has been during the past few weeks very, very tricky to trade. So, you know, I tried trading it once when it was attempting to break out there. My stop loss was hit because we reversed intraday, and I didn't attempt to trade it again, thankfully, because, you know, we had one more false breakout. And we're back again within this triangle. So, you know, what can I say? No risk reward for anything to do from here, in my opinion.
False breakout. Can you hear me, Steve?
You know, there is no bearish event to speak about, but look at those two false breaks higher that we've seen. I mean, that makes me a lot skeptical for upside. So
Emma Molman, are you there? Steve can't hear me for some reason.
I think we just need to let it do whatever it wants to do until it starts trading in a more clean and clear way. That is going to be easier for us to, you know, have some targets, some formations or whatever. Until that happens, personally, I'm staying.
Emma,
you can
are you
hear
around?
So then something is wrong with Zoom.
I don't know. Can you hear me now?
Okay. Dale, for some reason, I can't hear you, although I can hear, I could hear you before and I could hear Stelios. So enjoy the interview.
Hey, guys, let me see if our guest is here. Emma Molman, please report to the set for your interview. Send me a message in chat. I don't see you anywhere.
Hey, Coach.
Yeah.
Okay, I changed my sound source and now I can hear you. That's the second time it happens. So what's up with your what's up with
It's a mystery. I'm calling her. I'm calling her out here in the room. I don't see her. So I guess she changed her mind or something happened, but this is the second time. So my guess stage fright. That happens sometimes. So anyway, I was looking at your crude. To me, I thought yesterday, once we started trading under that descending triangle line, Steve, it was a false breakout. I think we're headed back down to the baseline and take it out. So
might be the case, but you know, usually if I see this kind of erratic trading from any instrument, the safest thing to do is stay away until you get more clarity. I mean, there's no reason to try to toy around with it. I mean, it's not like there's only one market we can trade, right?
Yeah, well, you know, when I look at this daily, I think some of the best trades are markets that break out. I'm showing my screen right now. And, you know, I was playing it for the breakout. And then the other day, Steve, you know, I don't like several tests of a breakout. You had one, I thought maybe we could have two. But yesterday, once we started cutting back underneath it, to me, this is a breakout failure.
I can tell you as a fact that if you go to the daily, you'll see
there it is.
If you want to trade it short, in my opinion, a daily close below 54 then opens up 50.5. So
yeah, that's a descending triangle if you look at my chart.
Yeah, if we do close below 54, then yes, most likely there's, you know, at least another $3.50 of downside towards 50.5.
Yeah, and then under that it measures 34.
Oh, under that, much lower.
Yeah, $16 formation. So I don't think Emma's here. I'll try it one more time. Emma, would you like, if you're here, it's time. It's an opportunity. The window of opportunity, just like to get long gold all week, has now closed. And everyone, thank you for joining us. Look forward to our promo next week. Remember, don't just count your pips, count your blessings. good hunting the rest of the day. Steve, thank you very much.
Thank you, Coach.
Let's see if there's any.
See you in the chat room.
Chat for me.
For the rest.
Okay, you're very welcome, guys. All right. Okay. Oh, you're very welcome. Yeah, you guys. All right. So become part of our trading community. That means that you're going to have to, should I say the words? Spend some money. Who's afraid of spending money? They'll gamble thousands. Hammett just spent some money. Oh, okay. All right. Anyway, love you guys. Good. We're rooting for you. And we'll see you tomorrow to wrap up the week. So I guess I'll just, Steve, can you end the meeting for me? I don't see the end meeting sign here anywhere. Claudia loves me back. Oh, I like that. Oh, here I can, all I have is leave meeting. So I wonder if anyone could help me end the meeting. Steve, are you still there? I guess he took off. Okay, so I'll stop the share. Maybe that, all I have is leave meeting.
It's okay, Coach. I'm going to take care of it. Don't worry.
Okay, thank you. All right. Go ahead, say the tagline.
Don't just count your pips, count your blessings, and enjoy the rest of the day.
There you go, buddy. All right, see everyone tomorrow. Adios.